near to midterm reopening of the economy is casting a light on a few key trends we're seeing in the market, specifically around the broadening of the CFO role, the CFO labor market, and the commuting arrangement that many executives have become accustomed to over the past few years. This pandemic applies pressure to everybody within an organization. There's no one that's immune to this. Even pre-COVID-19, the role of the CFO was a highly evolving position as the trend was moving away from reporting the numbers to interpreting the numbers, from the back office to a highly engaged business partner. This pandemic only amplifies that trend. Generally speaking, the business context has remained consistent over the past few years, with most platform companies looking to deliver efficiencies, margin expansion, and aggressive top-line revenue growth through an add-on acquisition strategy or organic growth opportunities. There have been levered situations, but just not as many distressed situations, which will clearly become more prevalent over the next few months. De-risking, restructuring, rigorous cash management, supply chain adjustments, reassessment of business models, products and service lines, contingency planning will now be in more focus. At the same time, the CFO will need the tools, the insight, and the preparedness to take advantage of upside opportunities within their respective markets as the economy continues to heal. Because of the most recent business environment, all of these new conditions are forcing CFOs to flex capabilities that have been, more often than not, moderately inactive, ultimately elevating those executives who are adaptive and can apply their skills under a highly unusual set of circumstances. The second trend we're seeing in the market has to do with the simultaneous tightening and loosening of the CFO labor market. The proliferation of private equity investing has increased the demand for high-performing CFOs who have superior critical thinking, problem-solving, and decision-making skills. Although the economic fallout will certainly loosen the CFO labor market on one hand, with uncertainty and volatility naturally leading people to hedge against their current situation, on the other, the level of discernment has greatly increased, which creates this contradictory dynamic. CFOs are rightly examining the coronavirus's downside risk on a portfolio company's cash position, fundamental business model, and underlying investment thesis. Although there will be many executives in suboptimal situations, their level of trepidation, risk assessment, and due diligence will actually limit the number of people who eventually make a job change. Lastly, given the circumstances, onboarding becomes tricky, start dates become fuzzy, and the notion of a flexible commuting arrangement becomes uncertain. There are many CFOs that have either considered or are currently in a situation in which they reside in one state, they work in another, spending the work week in a hotel or rented apartment. This flexible commuting arrangement moving forward will require a very creative solution, time, and patience. But for the most part, it's just not a viable option for many months to come. How this all plays out is unknown, but it's just another uncertainty among a list of many others as we all go through this together.